Angus Gidley-Baird is Senior Animal Proteins Analyst at Rabobank. Good to have you with us again this year, Angus.
G'day, Ricky. How you going?
Very good, thank you. Look, and things have been going pretty well for our livestock producers last year. First of all, how are things shaping up for the start of this this trading year as the sale yards opened up after the holiday break?
Yeah, look, I mean, things are still looking very positive. We've got, continuing healthy prices. Or young cattle prices took a little bit of a dip, but really, I mean, they're living in sort of very rarefied air up there at the moment, so a little bit of a dip's not a big adjustment. Lamb prices continue to be strong, so it looks like the market's opening the year very similar to where it was last year. Probably the one thing is just looking at numbers coming through though. We're a fair way down on our weekly slaughter kill for the eastern states at the moment, whether that's COVID related with processing plants or whether that's a reflection of some of the availability out there. It's a little bit unclear at the moment.
Now, when you say availability, do you mean in terms of maybe farmers are hanging on to a bit more stock now the pastures are even wetter, or something else?
Yeah, possibly that. Possibly them just sort of being a little bit cautious as to starting the year, seeing which way the market goes. Are we going to hold on to these lambs or these steers at the moment, or do we want to sell them now? There might be just a little bit of that in play at the moment, but we are down considerably. I think lamb numbers at the moment are down compared to last year, down about 20% across the board, 30% compared to the 5-year average, and we can see, it's the same in New South Wales, Victoria and South Australia. They're down. New South Wales down 13%, Vic down 30%, and SA down 63% on the 5-year average for the first 3 weeks of January anyway for lamb numbers. So, it's just interesting to see how that's going to play out, whether or not that's setting the scene for the year or whether this is just sort of a slower start to the year.
Possibly a cagey start for the year. Now, what about these logistical impacts we've got the one going on with Western Australia effectively cut off by rail and road after this flooding in South Australia. Is that possibly going to have a knock-on effect on prices anywhere?
Look, I mean, it's obviously creating headaches in the system, it's strange to be talking about it here. We've talked about the global logistic problems we've been facing for the last 12 months plus, with shipping routes, delayed and congestion at ports and increased, testing regimes, etc., that have delayed and added cost to the system. But now, with road and rail networks in Australia cut off and, places like Western Australia and Darwin, trying to reroute goods to get them onto the shelves, a bit of a challenge. I think we're still very short on supply, and we've got some very healthy demand at the moment. So I don't think it's necessarily going to have an impact on livestock markets here.
Well, when we look at the beef herd and how much it's been building, Meat and Livestock Australia were fairly bullish, excuse the pun, about how much bigger the herd's going to get this year.
Yeah, and to throw one back at you, it looks like it's steering itself in the right... This is terrible, isn't it? Positive signs in terms of the rebuild and the growth. They've got some strong figures there in their projections that they released earlier this week. Slaughter numbers up 11%, a slight lift in carcass weight, so production up as well, exports recovering. So the ability to probably capitalise on some of these strong prices. Now, we think, with this increased volume of cattle coming into the market, we will see prices contract. But as we know, they're operating in rarefied air at the moment. I think it's probably reasonable to expect them to contract. The question is when they'll start coming down and by how much.
Now, this one's a bit of a googly, I guess, in a way. I just figure that you're with Rabobank, you're involved in helping finance farmers' plans for expansion or what have you. Are you seeing anything on the real estate front when it comes to the way the markets are looking and optimism when it comes to buying properties?
Yeah, look, we do look at the property market, and I must admit, my colleague Wes Lefroy is the guru on property markets. But he released a report late last year looking at the Australian ag property portfolio, and while it's still very positive, we just don't think it's going to be as strong as what it has been in more recent years, but still very positive. You can only look at it across the ag spectrum. There's very strong commodity prices, grain prices, very strong livestock prices, very good seasonal situations at the moment. So that always buoys producer demand. It's helping returns into farmers' pockets, and that always encourages some investment back into land.
Good one, Angus. You've played that comfortably away on the leg side. Thank you very much. Thanks for joining us again on Flow. We'll catch you again soon.
Not a problem, Ricky. Always great to chat.